Hey everyone, Anthony Venuto here with In Touch Mortgage Solutions. It's Friday, Finance Fridays. Thanks for tuning in again. Today I want to talk about some of the things that are happening in the news for insurance, for mortgage default insurance and CMHC. So for those of you first-time home buyers who are interested in what happened with CMHC and why there's a little bit of news around them, stay tuned. So in the news, we've seen the headlines that CMHC has basically come back on board, and I mean, I guess it's all about optics. What I want to do is preface this to what happened last year. So in June, July of 2020, CMHC decided to tighten its own regulations on how it decides to lend out to clients or who it's going to lend out to. So because they were under the impression under Evan Siddell's guidance, the former head of CMHC, that, it was all doom and gloom and that things, we needed to change because the real estate market was going to take a massive shellacking, so to speak. Okay. But as we fast forward, everything's 2020 hindsight. We've seen that the market's performed very well. And it is my opinion that CMHC realized that they lost a huge chunk of the market share as a result of trying to tighten their guidelines, because most clients that are going to the insured product are at the tail end or the extension of the ratios, not all the way at the bottom of it. So, and also their credit was probably, maybe in between where they were. So the banks, when they select where we're going, it depends on a few factors. So just to be very clear, point number one is all insurance premiums, there's only 3 of them in Canada that any bank or any lender can use, is CMHC, Canada Guarantee, and Sagan, or previously known as Genworth. Those are the 3 major ones that are only available to anyone. So when we lost one of them, we were only left with 2, and now that they're back, it's good to have them back. But they've just returned to their previous guidelines. Like, they've just come back and said, okay, maybe we were wrong. Maybe we're not going to admit to it, but we're just going to come back and go back to the way things were originally. So what does that mean if you're going out there to purchase a home and you're looking to buy with less than 20% down? Well, what that means is that obviously you will require mortgage default insurance, right? This is an insurance premium that adds to the bank's protection that in the event that you default, that the bank is covered, right? So this is what you're paying for. So when you're getting insured by one of these 3 insurers, the premiums are all the same. It doesn't matter if you go to one or the other. There's no difference in regards to cost to you at the end as the end consumer, as the end user. They're all the same. Each of the programs, the insurers do have different elements to their programs. Some of them are, better for, multiple residents. Some of them for new to Canada. Some of them for, self-employed. But generally speaking, all of them are identical in regards to what they offer. They're all competing with each other. One is just, as I said, more subsidized by the government, which is Canadian Mortgage and Housing Corporation. It's the big player in the game. And the other 2, which are more privatized, but also subsidized in some shape, way, or form. So what I want to do is clarify for you, the consumer, what the major components are of an insured mortgage. So based on the amount of money that you are going to come up with, whether it be 5, 10, or 15%, or somewhere in the middle there, you will be calculated a premium of what it will cost you to, obtain the mortgage, and that will be factored in. So first and foremost, if it's a $19,000 or $20,000 premium, you're not paying that up front. That is added back to your mortgage, right? The only thing that you would be paying for at closing on an insured mortgage is the PST portion, or the tax portion of that amount. So the larger chunk of it is added back into the end of the mortgage. Number 2 is that you're going to be looking at a maximum amortization of 25 years, okay? So you cannot exceed 25 years. You can have less than 25 years if you qualify, but you cannot do more than 25 years, as opposed to a conventional mortgage where you can do up to 30 years. The other limitation you may have as an insured and under the insured products, and whether all 3 of them, at this current moment, is that the ceiling is based at $1 million. You cannot purchase a home that is more than $1 million and get an insurance protection on it without purchasing, for $1 million, right? So if you want to buy for more than $1 million, just to clarify, you need to come up with 20%. If you're buying with below $1 million and you qualify, you can buy with less than 20% down. One other thing with an insured mortgage is you cannot buy a rental property. We get this question all the time, man, I want to buy a property, I got 10% to put down. You cannot buy a rental property under the insured guidelines. So And in the event like this, that you're looking and you own a property and you're looking to go buy a property, always speak to your mortgage professional, about positioning and things that may be available to you. But what the point of this video is just to really talk about the insurance premiums, talk about what this news with CMHC is and what it really means. It doesn't really make a huge change. Like any clients that have a mortgage already that is insured and it is placed with one of the insurers, it's not a big difference. You're not going to save more money potentially just because these products came back in. So I just really want to clarify that. Once again, as I said, if you guys have any questions, anyone has any questions, always feel free to reach out to us at In Touch Mortgage Solutions. We're here to help. Please don't forget to download our app and make sure you have some fun with it, whether you're looking to buy a home or refinance your existing one. We have a refinance calculator, we have land transfer tax calculator, stress test calculator, all built in. Lots of fun stuff in that app. So please enjoy it and have a great weekend. Thanks for watching.